Hello, my awesome commerce champions. Welcome back to Commerce Made Easy by Aiswarya. Let me ask you something. Have you ever checked your bank balance or your pocket money wallet, seen a decent amount, and felt like an absolute boss? But then, just a few days later, you look again and it's completely gone. You start questioning your life choices, wondering, where did it come from, and where on earth did it go? Well, if companies did that, they would go bankrupt. To prevent that financial heartbreak, we use a magical tool called the cash flow statement. Before we unlock the secrets of tracking cash, do me a quick favor. If you want to clear your commerce exams with flying colors and zero stress, hit that subscribe button right now. Give this video a big like and share it with your friends who also struggle to keep track of their cash. Let's get started. Let's start with the basics. What is it? A cash flow statement simply shows the inflow, cash coming in, and outflow, cash going out, of cash and cash equivalents during a particular period. Think of it like a financial CCTV camera. It explains exactly where the cash comes from and where it is used. Now, keep this in mind for your multiple choice questions. It is mainly prepared by companies. And because of its incredible practical usefulness, its importance has skyrocketed in recent years. Everyone from bank managers to investors wants to see it. Now, let's talk about the law. You can't just draw a cash flow statement on a piece of tissue paper and call it a day. There are strict rules. Under the Companies Act, 2013, financial statements must be prepared according to specific accounting standards. These standards are officially notified under Section 133 of the Act. And let me emphasize this clearly, these standards are mandatory. You have to follow them. If a company decides to ignore these accounting standards, their financial statements will not give a true and fair view of the business. The government will not be happy. So, where does our topic fit in? According to Section 240 of the Companies Act, 2013, the cash flow statement is officially recognized as a core part of a company's financial statements. And for your exams, memorize this code name. It is prepared strictly according to Accounting Standard 3, AS-3. Repeat after me, AS-3. Don't forget it. Under Accounting Standard 3, cash flows are divided into 3 distinct buckets or activities. This is the most exciting part. Let's break them down. Operating activities. These are your main business activities. The bread and butter of your company. For example, if you run a smartphone shop, cash received from selling phones to customers is an inflow, and cash paid to suppliers for buying those phones is an outflow. Investing activities. Think of this as the shopping spree for the future of the business. It deals with the purchase or sale of long-term assets. For example, buying machinery for your factory, cash goes out, or selling an old investment land, cash comes in. Financing activities. This is all about the big money, the capital and borrowings. How do you fund the business? Examples include issuing shares to raise money, cash comes in, or repaying a huge bank loan, cash goes out. Easy, right? Operating is daily business, investing is long-term assets, and financing is capital and loans. Don't forget these 3 important activities and its meaning. Alright, let's look at the ultimate, number 1 goal of this statement. If you strip away all the fancy accounting jargon, the main objective of a cash flow statement is simply to tell you where the cash came from and where it went during a specific period. It tracks your cash inflows and cash outflows. Think of it like a security camera for a business's bank account. It doesn't care about promises, it doesn't care about credit sales, and it definitely doesn't care about imaginary profits. It only watches the cold, hard cash. And to make things super organized, it doesn't just throw all the numbers into one messy pile. It neatly categorizes every single rupee into 3 buckets. Operating activities, your daily business grind. Investing activities, buying or selling big assets like property or machinery. Financing activities, how you raise capital or pay back loans. Now, why do investors, managers, and banks care so much about this? Because this statement gives them 3 superpowers. Let's look at them. First, it helps them assess the company's ability to generate cash. It answers the question, can this business actually make money on its own, Or is it just surviving on bank loans? Asterisk second, it shows exactly how that cash is being used. Is the company spending its money wisely by investing in new factories, or is it just draining cash on unnecessary expenses? And third, it helps evaluate the timing and certainty of cash flows. In simple terms, when is the money coming in, and how sure are we that it will actually show up? Because timing is everything in business. You can't pay your employees today with cash you're expecting to receive 6 months from now. Ultimately, all of this boils down to one final point. It helps people make solid, smart economic and financial decisions. It removes the guesswork. Alright, let's talk about why this statement is an absolute lifesaver for any company. Benefit 1. It makes financial analysis a breeze. Imagine you're checking out a company's health. A cash flow statement shows you the actual changes in their net assets. More importantly, it helps you evaluate 3 things: their financial structure, their liquidity, meaning, do they have cash right now to pay immediate bills, and their solvency, can they survive in the long run? It strips away all the paper-based promises and shows you the raw financial truth. Benefit 2. It's the ultimate tool for cash planning. You can't run a business on wishes, you need a plan. Because this statement accurately assesses how well a company can generate cash and cash equivalents, managers use it to plan for the future. If you know exactly how much cash is flowing in next month, you can confidently decide whether to buy new equipment, hire people, or hold back. Benefit 3. It completely fixes the comparability problem. Here is a classic accounting headache. Company A might use one accounting method, and Company B might use a different one, making their profit numbers look totally different. But guess what? A cash flow statement eliminates the sneaky effects of different accounting methods. Cash is cash. It allows investors to compare the actual operating performance of totally different companies side by side without any confusion. Benefit 4. It helps in managing cash during crazy times. In business, market conditions change constantly, sometimes overnight. A cash flow statement helps managers keep a perfect balance between cash inflows and outflows. It ensures that even if a crisis hits, the company doesn't run out of fuel. It keeps the business steady when things get unpredictable. Benefit 5. It acts as a reality check for past decisions. We all make plans, but are they always accurate? This statement lets managers look back and check if their past cash flow estimates were actually right. It shows the real, unfiltered relationship between accounting profit and actual cash. Plus, it helps you understand how changing price levels or inflation are impacting your money. It's basically the ultimate, told you so, document for the finance team. And that is a wrap on the benefits of the cash flow statement. See? I promised you it wouldn't be as scary as your textbook makes it look. Now, I really want to know what you think. Which of these benefits made the most sense to you? Or maybe a specific term like liquidity or solvency is still spinning around in your head. Whatever it is, don't hold back. Drop a comment right below and share your thoughts or any doubts with me. I promise I read them all and I'm right here to help you out. Before you head off to your next study session or go grab a snack, if this video made your commerce life even a little bit easier today, please do me a huge favor. Hit that subscribe button if you haven't yet, give this video a big like, and share it with your classmates who might be stressing over this chapter. It really helps the channel grow, and it tells me that I should keep making these videos for you. Make sure you keep your notifications on because in the next part, we are going to dive into the actual practical problems and solve them step by step together. Trust me, you don't want to miss it. Thank you so much for spending your time with me today. You are doing amazing. So keep studying smart, take care of yourself, and I will see you in the very next class. Goodbye. See you in the next class.